Matt Miller, thanks so much. Now we're going to continue our conversation with Danny Leipziger, Vice Chairman of the World Bank's Commission on Growth and Development. The bank has just released a study on how emerging nations can develop the economic growth necessary to lift their citizens out of poverty. And Danny reminded me during the break that, in fact, you launched this in London, Cairo, Cape Town, and New York. So this is something that's very important to you.
We have been working for 2 years, and the commissioners are working pro bono, and we hope that this report will have some impact.
Well, let's look at some of the countries. I mean, you note at the outset that there are 13 countries that experience sustained high growth, defined as 7% per year for 25 years or longer after World War II. Botswana, Brazil, China, Hong Kong, Indonesia, Japan, Korea, Malaysia, Malta, Oman, Singapore, Taiwan, and Thailand. When you talk about government in particular, which you just did, saying this is so important, what do these countries have in common on that front?
Well, you notice a lot of them are in East Asia.
Yes.
And so the clear kinds of lessons from that point are that government invested very heavily in infrastructure. And I think they also leveraged the global economy, because countries that are poor do not have the markets to sustain the kind of world demand that's necessary to really pull them out of poverty. So leveraging the global economy, investment in infrastructure, I think are two key aspects of that list of countries.
And when you say leveraging the global economy, you talk about, when you talk about the characteristics of sustained high growth cases, openness, import knowledges, exploit global demand. Is that what you're talking about?
Yes, we're talking about the fact that even a country, let's take one that's not on the list, Vietnam, 15 years ago had a per capita income of $150, and today it's 5 times that. So how did they get from point A to point B? Well, they managed to begin to tap into global markets and exported, and invested quite a bit of their GNP in infrastructure as well as education. So we think that these are long-term investments that governments need to make.
In terms of some of the big changes and challenges like climate change,
yes.
What is your recommendation there? Where do you see that as an obstacle, or countries that may have success?
Well, we do address that in the report, and we point out that per capita emissions are very high in certain countries, and that we need some global arrangements to bring them down. But we also stress the fact that there's a difference between who should mitigate emissions and who should pay. I think it would be unfair, I would say, in the views of the commissioners, to ask India and China to bear the brunt of all of the emission control that needs to take place in order to reach any reasonable level. So I think international coordination and financing to make these mitigation options work is where we're coming out.
What countries do you think are best poised now to enter this great group of countries that can sustain this kind of growth for 25 years or longer?
Well, I don't think we're in the prediction business like that, but I just mentioned Vietnam as an example in Asia of a country that is leveraging itself quite well. I think what we'd like to see, particularly in Africa, where there are fewer success stories, we'd like to see more countries reach this magic number of 7. The only reason we picked that is that your income doubles in a decade.
Quickly, what's the number one thing Africa has to do? Because I think a lot of people, even as investors, would agree with you. So much opportunity, so much potential to make money, but they're not quite there.
I would say regional infrastructure investment. I think there are just a lot of landlocked countries that could be competitive internationally, but they just don't have the logistics, the infrastructure in order to get their products out.
Any hope that's going to happen soon?
Well, we're always optimistic. That's why we work at the World Bank.
Okay. Danny, thanks for joining us. Really appreciate having you in studio. We'll look forward to talking to you again soon.
Thank you.